And we have speed. Welcome to the Professor CardWorthy YouTube channel, where we endeavor to explain all things financial. I'm Professor CardWorthy, and I have about 30 years of experience in the money stuff, so I want to share some information with you. Today's lesson is bad credit options. Now, what exactly is bad credit? Well, let me slide my little whiteboard over here to give us a little guide. Really, bad credit encompasses, if you look at FICO scores or Vantage score, you're going to find that anything in the 300 to 660 range is considered poor credit. Now, there's subdivisions of that. The upper tier, the 550 to 650 range, is called the subprime market in the industry. It's also referred to as bottom fishing. You're going to pay higher rates for credit cards and other loans in that range, but there are a lot of lenders who actually cater to that market, focus on it. The 300 to 550 range, that's poor credit, really poor credit. They call that in the industry mud fishing. Now, what can be the cause of that? What can make someone fall into that low range? Well, there's a lot of reasons. Certainly, if you have a lot of late payments, particularly 90-plus payment day late payments, charge-offs, as they call them, repossessions. It could be a foreclosure. It could be a nasty divorce. It could be unexpected medical expenses. It could be a bad business deal. All those things. What's the impact? Pretty extensive. If you have a credit score below 550, you might have a hard time even opening a bank account. I guarantee you most all credit unions will take a look at your credit score. If it's below 550, they're not going to open the account. The same thing, of course, with insurance, car insurance, home insurance. If you have a low credit score, that is built into their formulas, their algorithms to set the rates, and you may pay a higher interest rate. And certainly with utilities like phone, gas, electric, then same kind of thing. You're going to run into high security deposits. In some cases, some of the phone carriers may not even want to take you at all if it's really bad. And you know it's really bad if you're in this situation and you go apply for a payday loan in the neighborhood corner store and they turn you down. You know it's bad. But there are still lenders who will offer credit to people with scores below 550. What are the requirements? Well, it has really nothing to do with the score. It's whether or not you have $700 a month in steady monthly income. The thing about that is that if you're on disability, chances are you're getting somewhere between $700 and $800. So that's considered steady income. So if that's all you have and you don't have a job and you're on disability, you can probably qualify for the loan. You have to have a bank account in most cases because they like to automatically debit your account for the payments. And you got to be reachable by phone. You don't have to have the phone or own the phone. You have to have a verifiable email address in most cases. And of course, you have to be 18 and a U.S. resident, and then hopefully a heartbeat. So you can qualify. Now, there are some lenders, and we're going to talk about them here. If we slide up here, we picked out 3 that are in the market right now. And there's quite a few. But here's the deal. Here's 3 that we picked out. We identify them in the newsletter, but we don't do it for purposes on the tube and the pod. But in number 1, their interest rate range is 350 to 600%. Number 2, their lowest rate's 200%, and they vary up to 830%. Number 3 lender, they has a bargain, 97%, and they top out at 177. And the others that we looked at, the average tends to be around 350%. And that does not include what they call an origination fee. Could be 3%, 5% is typical. They used to call that on the street the VIG, which, is a service. That's how you get the loan, but then you still got to pay all this interest. So if you take those 3 examples, there's 3 lenders, and let's go through 3 examples real quick. With lender number 1, let's say you get one of their lowest rates, 355%. You get a $1,000 loan. you have to make 13 payments over a period of 6 months, which means you're making a payment every other week, or they're debiting that from your bank account every other week. Net cost for that 6-month loan, $2,450. Lender number 2, let's take $400. They say a minimum of 2, we'll take 4. And let's take their middle range, 442% interest. Well, they want 14 payments over a period of 6 months, which translates into $1,071. $400, nearly $1,100 is what you end up paying for that. In number 3, the one that's the least expensive, at 97%, take a $2,500 loan. Now, they'll let you make monthly payments, or they'll debit your account monthly, spread that over 30 months, and you end up paying $7,600.23 for that $2,500. So these loans are available, but obviously they're crappy deals, every one of them. I mean, you would have to have really flunked arithmetic to figure out that that's bad. What can you do? Well, I got 10 tips for you that I think could help out a little bit. Some of them are just common sense. And number 1, get a better job. If you're just barely getting by with the regular bills, you don't want to have credit costs on top of that. So if you've kind of kissed your credit off, don't go back there. Get a better job. Get the income up so you can pay your bills. Consider going all cash. There are a lot of consumers who do that. They don't want to deal with the bank. The bank won't approve them anyway, so they go to like a Walmart or something and get a money order and pay their bills, or they pay them in person in cash if they can. You want to save like crazy because you have nowhere to go. If you get into you got a flat tire and you got the money, you better have a cookie jar there somewhere. So save like crazy whatever you can. Find a secured card. There are some secured cards. Now, believe it or not, people think that if secured cards are available regardless of your credit. That's not true. When you get into your score gets into the 500s, and believe me, below that, you're not going to get qualified even for a secured card. There are risks involved with people with really low scores with a credit card. I mean, even though you're securing it, there are still ways that the bank can lose, and they don't want to take a chance. So you can find them, just make sure they're not totally unreasonable. The important thing, even if it's a low credit line, it's the fact that it's reported to all the credit bureaus is what's beneficial to you. The other thing is become an authorized user on somebody else's account, a relative, a close friend, somebody who can trust you, and they can add you to their account, and then it's reported to the credit bureaus, and it benefits your score. But again, remember, you're an authorized user, so you don't want to you don't want to lose a friend and really ruin their credit as well as yours. So it's a little dangerous territory to do that. You've got to be careful on both ends. The same way with getting a cosigner. It's another option you have. You need a car to go to work. Well, consider, a cosigner, somebody trustworthy, and stay within the range of something you truly can afford to pay back. So again, that you don't ruin, further damage your credit and damage somebody else's credit. There are some banks and credit unions that have what they call credit builder loans. And there's many variations of them. Some of them they'll allow you to open a savings account, and then they'll loan against that savings account and report it as a loan, even though it's fully secured. It may be actually oversecured. For example, it could be that, let's say you put $500 in and maybe your credit limit's only $300. There's all kinds of variations, but you could check with the banks. Some of them, they actually call them credit builder programs, and they're designed for people to get into this kind of situation. If you have really bad debt hanging out there that's unpaid, you can negotiate it. I mean, if you do come into some money, you might be able to settle it for a lot less, especially if it's a charge-off and it's gone to collections. You can do that. You can settle them. Some cases, depends on how old it is, you might be able to save it or reduce it to maybe 10% of its original balance. Typically, it doesn't go that low, but there is a lot of room to negotiate because they know your credit's damaged. So your only thing is just to get it off your credit file. Bankruptcy. Now you hear that's a bad word. It used to be. Bankruptcy was a bad word. Today, not so much. It's not a personal planning tool, financial planning tool, but it is an option. And there's two ways you can do it. One where you can kind of keep some of your assets, if you have assets. That's 13. You can go 7 and just wipe everything out. If you go to full bankruptcy, in most cases, your credit score will bounce up into the subprime range. I mean, it's a very, very big jump because you've wiped out all this liability. You still may have trouble, of course, qualifying for major loans like mortgages. There's also a newer thing that's happened, and that is credit score boosting, where the credit bureaus themselves will take a look. If you give them access to your bank account and they see that you're making your rent payment on time or your mortgage payment on time and your utility payments and your cell phone, those 3 things, and they see that they're all on time because they're not reported to the credit bureaus unless you got a problem with the account. That also can boost your score, typically 30 points, maybe a little bit more or less. I've heard stories where some have received 50 or more points in their credit score. So that's kind of the 10 things to take into consideration. Just one final note is to beware of debt consolidation firms, debt negotiating firms. They tend to, most of them are connected onto the actual credit card issuers. I mean, they're trying to get something, blood out of a beet or whatever you call that expression was. But you still want, there are legitimate ones. Some of them are nonprofit organizations. They're very helpful. Just beware and make sure you read all the fine print and that you know exactly what you're getting. So just remember that you might be in a real crappy situation, but you still have poor credit options. And I just wanted to say that, as I always do, I say, are you card worthy? Well, if you are, that's great. If not, keep coming back. You take enough lessons, all my students will eventually be card worthy. If you want to check out more on this, all this information is just the tip of the iceberg that's on the website and the blog, Professor Cardworthy's Corner. It's all at cardworthy.com. And of course, you can also check out our podcasts, which are available on all the podcasts. So anyway, have a great day and keep charging ahead. And thanks for watching. I'm Professor Cardworthy.